Thanks for taking our questions. Governor Macklem, you said earlier that you expect the labor market to come back into better balance. A lot of economists have kind of theorized that if there's a mild recession, some businesses would actually be reluctant to shed jobs given today's labor shortages. Would businesses holding on to labor through a recession affect your ability, the Bank of Canada's ability to slow demand? And would that potentially force additional interest rate hikes?
Well, look, the labor market is certainly an important element of the information we're going to be looking at. And, as we've highlighted and as we published on our website, we're following a wide range of labor market indicators. You can't really summarize the health of the labor market in one or two indicators. I think, look, if the labor market doesn't rebalance, if it remains really tight,
the host of the meeting. This meeting will end in 5.
And that continues to put upward pressure on prices. Yes, that is something we'd have to take into account. You'd probably see that more in service prices. And in one of the boxes in the NPR, we do outline that we're starting to see goods prices or inflation in goods prices come down. That's partly the resolution of global supply chains. It's also partly the monetary policy working to soften demand. It's going to take longer to bring those services prices down, and that rebalance in the labor market is an important element of getting service price inflation to come down.
I've received one of the questions online by email. I'll just pose it on behalf of Kat Eschner from TVO. She's asking if, Governor, could you please tell more about the range of labor market indicators that the bank is watching to establish what it considers the maximum sustainable level of employment?
Actually, I'll ask the Senior Deputy Governor to say a few words about that.
Turn my mic on this time. Thanks for the question, Kat. We watch a really broad range of indicators, but really at this point, by any measure you look at it, the labor market continues to be tight. I mean, there's a couple of good elaborations of this in the NPR report. Chart 10 is one that we've included for a while now, and you can see a number of data points that tell us that the labor market continues to hover around record highs. The historical low unemployment rate is 4.9%. We're sitting at 5%. Unemployment is below pre-pandemic levels in every province in Canada. So those certainly are key indicators. But as the Governor said earlier, there really isn't a single indicator that tells us, without reservation, that the labor market has recovered. So we're going to be continuing to look at this broad range of indicators. And we're going to add that to other data we see. As we've said, the pause that we're communicating today is very conditional on the economy evolving the way we've laid out in our NPR. It took us an accumulation of data to get to the decision that we made today, and to get to the decision to pause, it will take an accumulation of data in the other direction. We need to see momentum turn to come off that pause. But if it does, we will absolutely act the way we have acted continually over the last year to get inflation back to our 2% target.